What's good, everybody? This is Jad from the Bliss Life. Today, I'm going to be outlining Palantir's SPAC investments. The key takeaways that I want from all of you is to know which companies Palantir's invested in, what are the percentage ownerships, if Palantir's buying revenues, and ultimately, my Bliss Life score where I'm tracking the companies and I'm going into the details. I think this is something that could be super valuable for all listeners so that you can really know, okay, well, what companies am I invested in by being a Palantir investor? So I'm going to make my screen a bit smaller. Let's just get straight into it and let's get started. All right. So in this table in front of us right now, what you're looking at is all the companies that are known for a fact. Q4 2021, Palantir's invested in all of these companies for a total investment of $326 million. The biggest takeaway that I want you to have from all of this is that there are $768 million in revenue agreements for these 16 companies. Now, of these 16 companies, what we do know publicly is that Cellularity, we have a $40 million deal. Black Sky is an $8 million deal. Roy Sarkos and Roivant Sciences, we have 42 and 39, and Wejo is 53. So that's the ones I was able to pinpoint based on the research that I've done so far. But in Palantir's Q4 financials, they came up straight up and they said, okay, look, we have $768 million in deals, of which 116 million are options. They range from 3 to 10 years, and obviously all of these deals can be canceled if the company chooses not to do business with us. So there's a little fine prints in there, but so far that's what we know. Now the next big question is, okay, well, is Palantir buying revenues? I know how much is Palantir buying revenues? It looks like they're just investing in these SPACs. They're dropping 326 mil to get back revenues. Well, clearly they're not buying revenues, because if they are, they're doing a fantastic job. They're putting in 326 and they're getting an investment in shares of a company that's there forever, and they're getting $768 million in deals if all the deals go through. So obviously this is a crazy win. It's crazy ROI. The ROI is already 100%. All right, so done. But the real thing that I need you to take away from is the ownership, the percentage ownership. Okay, this is where the concept of buying back revenues really starts to collapse. The average ownership of Palantir is 1.54. All right, so Palantir owns about 1.54%. We don't know the exact deal percentage of all these companies, but we know there's 1.54. So 1.54% of the $768 million in deals that we know about is $12 million. So that means Palantir has invested $326 million. If all these investments go to hell and they go to zero, then technically you could say that Palantir bought back $12 million of its own revenues, because the cash that it injected into these companies, the ownership percentage in those companies, and then those companies disbursed 768 million. Of that 768 million, 12 million technically would have been Palantir's cash. So that's why I feel like this idea of Palantir buying back revenues, that theory is really debunked, because it's not necessarily true when you have 99% of the other shareholders putting in their own money that they have rights to or entitled to into a revenue deal for Foundry, or buying Foundry or Foundry services, and they're paying for it. So this is why anytime I see any type of FUD about Palantir buying its own revenues is not organic, this, that, or the other, I just roll my eyes and I keep going forward, because this is just an easy tactic for people to paint a bad picture without really giving you all the details. And I'm giving you all the details right here. The biggest ownership that Palantir has in any of the companies would be Astrocast, because Astrocast doesn't have a lot of shares outstanding. They're based in Norway. But if the next one would be Wejo, they own 3.73% of Wejo, because they have 3.5 million shares, and technically, according to Microsoft, there's about 93 million shares outstanding. And when I say according to Microsoft, I mean based on the Excel file. They're doing the research and they're pulling out the data and giving it to me and telling me how many shares there are outstanding. So right now we know there's 94 million shares of Wejo outstanding. So that's what I mean by there's 3.73%. That's Palantir's ownership stake. because you just do 3.5 million shares of 93, not over 94, you get your 3.73. Okay, done. That's it. Okay, we don't have to talk about this FUD of Palantir buying its own revenues. I personally think it's total BS. Okay, now the next point that I want everyone to take away, and this is going to hurt a little bit, it even hurts me, but then again, I know it's a short term, I don't have that short term mindset. Shareholder stock prices are changing wildly every single day. It's like it's a whipsaw, so these short-term gains on the stock market, Palantir is not a day trading company. They're buying and investing in these companies because they think they're all going to be massive disruptors. They're going to be huge disruptors. And if that's the case, we need to wait about 3 to 5 years to see if they can pull off what they say they're going to do. And if you're following the Russia-Ukraine news, you already know Black Sky is doing big things by giving satellite imagery as to what's going on the ground, okay? Now, the sad news is based on the latest share price as of 4th of March. Palantir's lost 153 mil. And when I say loss, I mean it's an unrealized loss. Not really a concrete loss. They didn't sell their shares out yet. So technically they have an unrealized loss of 153 million, which is pretty extravagant. It's a huge number, but all of these SPACs have suffered in terms of pricing because all growth stocks have suffered. Now, if we scroll a bit down, we also have these companies where we know that all of these deals have closed. In the financials, it said that it was an investment agreement. It was a contingent investment agreement. It wasn't confirmed yet. But now that the companies have went public, now we know for a fact that they went public, then the conditions have been met, and Palantir is now an investor in these companies. So when we consider these companies as well, our total loss goes up to $166 million. And the only silver lining in all of this is that gold, Palantir's $50 million purchase of gold, is actually up 8 mil right now. So that's the only thing that is looking good. Why did I say 50 million? Yeah, 50 million. Yeah, $50 million of gold. Yeah, exactly. So gold is doing well right now for the 100-ounce bars. Okay, so that's it. All of these losses over the total number of shares outstanding as of Q4 represents about 8 cents loss per share. So that's kind of heavy. Just from these shares and these unrealized losses, we have almost a 10% loss per share. So that is something that could obviously change in a big way in 3 months. But all you need is really just one company to do what they say they're going to do. And if they can pull out a 10x, then the rest is history. These losses would be wiped out right away. And I'm talking about, like, for example, if a Wejo or a Lilium, if Lilium does what it says it's going to do, Lilium says it's going to disrupt short haul travel or short distance travel that's beyond like 30 minutes, so 30 to 1 hour, 2 hours. They're trying to target that market between major urban areas in the US and in Europe. So if Lilium can do what they said they're going to do, and within the next few years they get FAA approval and they get this equivalent approval in Europe, and they start doing what they say they're going to do, and they commercialize and they start hitting their triple-digit growth targets that they want, then imagine if this $3 becomes, $30, then suddenly, your loss is down in half. It doesn't take much to change this around, and Palantir's investments in all of these disruptors could be a game changer. All you need is 1 or 2 to really do well, and these losses are wiped out. Now, if you know about my channel, and if you've been following my channel, I have been doing a detailed analysis on all of these firms. On all of these firms, I've been doing this concept of the Bliss Life score. And what the Bliss Life score really means is, would I myself invest in these companies on a standalone basis? If I knew about it, if someone told me about it, would I be interested in investing in them? And most of them, I've said yes. A few, I've been speculative, just because there's a lot of car companies or a lot of transport firms that have promised the world, and for whatever reason they can't get licensed, they can't get approvals, and then everything falls apart. So for that reason, I gave Faraday Future a loss because I still have yet to see a real commercial production vehicle that's being sold actively. Same thing for Lilium. They have a prototype that works, that can fly in the air, but if the FAA changes their mind completely, then it's game over. So based on the score that I have here, what I've concluded is that a lot of these firms are having a challenge in terms of raising capital, right? Because if you look here, almost all these companies, they're not profitable today. They're not making money, or they need more money. So the only company that I remember clearly that said they don't need any money was Sarcos Robotics. They said with the funding, they should be good to bring their robotics out to everybody, out to all the companies that need more manpower but can't find manpower. So they're going to complement existing labor force to do heavier jobs with the robotics. So that looked promising. Roivant Sciences, I remember that they weren't profitable, but they were each division that hit the home run. So they have different departments, and if each department came up with a successful drug, they would sell it, and when they sell it, they made a killing. And because of that, I didn't give it a red, I didn't give it a fail, but most of them were pretty bad. But all these companies, what they do share in common is they're all super innovative, and they're gonna do some good for the world, whether if it's through sciences, pharmaceuticals, whether if it's through allowing people to do better work or travel or cut global emissions and contribute to the fight against climate change. All of these companies had something that was interesting, and the risk versus reward, obviously all of them are promising huge things, and if they can pull off what they were going to pull off, then it would have been a major win. It's going to be a major win. So having said all of that, I concluded that most of them were wins. As you can see, there's so many now being added to the list. We got Babylon Health that I have to do, Bird Global, Embark, Pear, Box, Sky Dweller, Hyundai Oil Bank, Adherent. There is just so many things going on with Palantir that I think there's going to be a lot of data for us to go through, but I think it's key that we go through it together, and I'm going to do my best to summarize and attack these companies in a timely way so you guys can all understand what's going on with Palantir. Because at the end of the day, regardless of Palantir's share price, trust me, I know how Palantir's share price is going into the gutter. What really keeps me feeling comfortable in my investment is the fact that I'm equipped with so much knowledge on Palantir that I'm super comfortable holding, and I'm almost convinced that the world is soon going to realize how valuable Palantir is. And when that time happens, Palantir is going to be approaching a rich valuation, and all the investors that did their due deal and have been holding long and strong, those investors are going to be rewarded handsomely. So that's all I have to say. If you like what you're hearing, and if you want to follow my story, you could see all of the descriptions or all of the due diligence that I've done on Cellularity, Faraday, Astrocast, Black Sky, Lilium, Roivant, Sarcos, Wejo. I've done all detailed, dedicated 1-hour videos or 30 minutes to 1 hour videos on all these companies. If you want to see that, then definitely hit the subscribe button. Go check out my Palantir due deal playlist. You're going to find all of that and all of these informations, this education that you're going to get by watching these videos. I know for a fact it's going to make you feel more comfortable in what you're investing in, and it's going to let you decide, okay, well, should I buy, hold, or sell? And that's what it all comes down to. I really created this channel just to make sure that people are equipped with knowledge and education so you can decide for yourself and not be influenced by the whipsaw price action of a certain stock, or what people are saying in a Discord, or what FUD people are spreading. And that's the whole point of my channel. I want to document everything that I'm doing to hit my retirement target by the age of 40, and one of those things is investing in companies like Palantir and sharing my due diligence with you so you can make your decisions as well. So that's pretty much it, everybody. Thank you so much for watching. I'll see you on the next one. Peace.